Well, in this module for accrual accounting, we will discuss the technique or the formula for calculating income for the year. So let's see that what we do if income with closing balance of accrued income due and advanced income or advanced income received or unearned income is given. So for income received in cash, which we'll be getting from the cash book, add closing accrued or due less closing advance, which is also known as unearned. We will get this income for the year, which will be closed in the income statement. And if the opening and closing both balances are given for accrued income and advance receipts for that income, which is also known as unearned, so the formula for that would be income received in cash, which we will be taking from the cash book, add closing accrued income, which is obviously receivable and it is our asset, less opening accrued, which was our asset in the previous year, received in this year, will be subtracted. And less closing advance means unearned. If we have received in advance on the closing date, we get to know that there is some income we received during the year that does not belong to the current year, rather that belongs to the next year. That will become our liability and will be subtracted from this. And if there was some advance income received in the previous year, that would be known as opening advance or unearned, that was liability in the previous year, will be added. So we will get income figure for the year, which will be taken to the income statement. So let's do a practice to learn it more about this income calculation. That rent income received during the year is 3,000 and the opening balance of income due was 150 and opening balance of unearned income was 500. On closing date, income still due means still receivable is 70 and unearned income on closing date is 50. So what we have to prepare is rent income account, accrued income account and unearned income account. It will be easy for you since we have worked it out for expenses in the previous module. Well, here we see these three ledger accounts: income account, accrued income account and unearned income account, which is also known as advance income. So in this income account, what we see that in the credit side we have opening advance, cash received and closing owing. When we make addition of these three, it is 3570. And in the debit side, opening owing or opening due we can say, and closing advance, which is total 200. We'll subtract this from 3570. The balancing figure 3370 is to be taken to profit or loss. This is the balancing figure. This is the total income for this reporting period. In this accrued income account, which is also known as income due or income owing, what we see that its opening balance is being put in the debit side since it is receivable asset, and then its opening balance is transferred to the income account. You can see that it is transferring from credit side of accrued income account to the debit side of the income account. And then closing balance of 70, it is being transferred from the income account because we have received it in the credit side in the figure of 3,000 and we are now transferring it from income account to here 70, which is like it is our in fact income due for the year. And then it is our closing balance. And then unearned income, it is like opening balance transferred, which is the brought forward balance 500 and which is transferred to the income account 500 there. We can see it in the credit side of the income account. And then closing balance, which is 50, transferred from income account 50 and it is being taken as carry forward balance. So once again I'll say, don't get confused. All this working is just to show you that how these income account, advanced income account and income due account will look like. And In fact, its details we will be covering in the upcoming modules. But for this very module, just keep this ITTR in your mind, that cash received during the period for an income is always different for the year income. And income is measured based on its belongingness towards the reporting period, regardless we have received it or not. And then the formula that closing due is always added in the income received during the year, and opening due is subtracted. Due and owing is the same thing. And then opening advance is added in the income received during the year, and closing advance is subtracted from the income received during the year. So these are the few techniques or formulae that you should learn by heart. Keep it very much clear to you. And whenever you are doing any practice question for accrual, please keep this formulae or technique in front of you and then start doing the question. Anyways, in the upcoming modules, we are going to learn the true concept of this accrual-based accounting. Thank you.